So, turning on my screens this morning, I saw a lot of new post-coronavirus highs as companies that just a few months ago looked like they were going under are coming back in a big way. But as Wall Street rings the bell on these new highs, in many cases, Main Street is ringing a different bell. So, what's your best bet going forward? We're going to talk about this and investing in one of the safest alternative assets around. Let's get started. Hey, ready, Tom Gentile. Welcome to another edition of Optionetics in Tom's Trading Room. Glad to have you sitting in here with me. I want to take a look at several charts that have recently reared their heads to the upside. We're going to take a look at the U.S. Labor Statistics Report, and I want to open up some charts and kind of show you what I'm looking at there. Some charts that you may not have seen, and ways that I am investing in gold, and in some cases for just pennies on the dollar. Let's go ahead and get started. Behind me here, S&P 500, look at this chart. The low, 218.26. That was 50 days ago. Where have we gone? Well, we've gone all the way up above 318. That is a 37% increase in just the last 50 days. All right, are you excited yet? Let me show you some more. Take a look at this. Booking.com up $800 a share in 50 days. The low was 1107. This thing's trading above $1,800 a share now. It gets even better. All right, when we go deeper into leisure and travel, we see Delta Airlines has doubled. In a month, it's gone from a low of $17.51 to highs of over $34 a share. The best one I want to show you, last week I did a video on Hertz, and we talked about Hertz and the ability of Hertz possibly going bankrupt. And if you really believe that stock was going to go higher, I offered some strategies, a couple different strategies you can take a look at. Well, look what's happened inside of a week. Hertz has gone from under $1 a share, and it jumped up as high as $4 early Friday morning. That's a 300% gain. So where do we go from here? And once again, all of this right here behind me has been happening because of a lead up to today. The May labor reports. So we're looking at the U.S. Bureau of Labor Statistics, and what we found based on May, non-farm payrolls rose by 2.5 million in May, but here's the big news. Unemployment rate falls. Can you believe that? Falls to 13.3%. Let's open up some charts and look inside of this report, and I want to show you a couple things that you might not know. All right, this is an unemployment rate seasonally adjusted, and it goes all the way back to May of 2000. So this was just after 9/11 and into 2002 when unemployment was up above 6%. This area right here, well, this was the financial crisis of 2008, 2009, where we saw unemployment as high as 10%. And here we are just recently coming into May of 2020 with historically high unemployment coming up to 14%, but like I said, dropping into the low 13s. This really breaks it down in terms of not only just non-farm and total private, all right? Let's go below that. And you can see over here on this side, this was the areas where jobs by sector decreased the least. We're talking about goods producing, mining, construction, wholesale trade, utilities, financial activities, professional business services. The ones that got hit the hardest, service providing, lost 17.5 million jobs, all right? And then here's the other one right here. This is leisure and hospitality, another one that's not a surprise, lost nearly 7.5 million jobs. So the bulk of jobs that are being lost are in these two sectors. So how do companies handle unemployment? Companies don't go on unemployment, but they file for bankruptcy. I Googled bankruptcy for 2020. This is what I found. Out of 15 million plus results, every day this area changes with new companies that are filing Chapter 11. We're seeing that 41% of companies that are filing for bankruptcy are in the consumer discretionary business. You know where the rest are? Well, here's the ones that we talked about earlier that really are not seeing big changes. Consumer discretionary and energy. Now, here's something you may not know. Millionaires, all right, they are betting the stocks are going to take at least another year to rebound. They expect stocks to go lower and end lower for the year. They also are putting less than 1/3 of their investments into the stock market. All right, so again, the question bears, where do we go from here? Where are the safest places to put your money moving forward now that this market is on fire and you have fear of missing out? All right, well, this is where I'm putting my money. Gold. Gold has actually been up 50% in the last 2 years. And yes, you see the stock market's up 37% in the last 50 days, but when you back that up into the last 2 years, gold is shining quite well. And I believe this is only the beginning. So if we take a look at gold, what we're going to see recently is because of the labor report, this has caused GLD and the price of gold to actually drop. All right? It's been holding support around $1,700 an ounce, but there's a lot of now pressure on the downside because of what happened today with the U.S. economy, creating 2.5 million jobs in May. All right? As the economy shows signs of life, people are going to come out of that safe haven. But I believe this is a knee-jerk reaction and possibly a buying opportunity in gold. All right, so if you believe that this is a buying opportunity in gold, there's a couple of different ways you can handle it. Number one, we could simply go out and buy gold. All right, I own gold coins, I own gold bullion. And my quick advice to you on this is if you want this, find yourself a reputable dealer. It doesn't have to be local. You can find some good national dealers out there. Just go out and Google gold dealers and do some homework and find someone that's right for you. Also, you might want to consider storing your gold off-site. I know people like to hold it in their hands and clink it and count it, but honestly, it might be better off for you to have the dealer store it. GLD, which is the ETF that I use for gold, you can do a number of things with it. You could buy it, first of all. All right, so if you like gold and you like GLD and you want to have something that moves with the price of gold, this is it. At $160 a share, because that's what this is trading for, right around that price, it's going to cost you $16,000 for 100 shares of GLD. That's your cost and your risk. And to get a double on this, forget about the conservative estimate, to get a double on this, we're talking about a move that has to take GLD to $320 a share. Now, what else could we do? Instead of owning it, how about renting it? Renting it, and the way I call renting it is by buying options. Buying call options gives you the right to purchase an asset at a certain price for a certain amount of time. Your risk on the position is limited to the cost of those calls, and your reward is actually unlimited as you're involved in the investment. Take a look at these option prices on GLD. Here's what we got. So I'm looking all the way out to the end of December, the end of this year. And you can see the 160 calls. Now the 160 calls give us the right to buy GLD at 160. Right now they're trading for about $770. So that means you're going to pay $770 plus commissions. If GLD is at 160 and we go to 200 by the end of the year, that's 40 points between where you have the right to buy it and where it's trading at right now. So your $7.70 investment could be worth 40, which would be a triple. Now another way we can do this is by creating a put position. And I'm not talking about buying puts, I'm talking about selling puts. Selling puts is another bullish opportunity you can take in gold or any other asset. It obligates you to buy the stock at a specified price for a specified time. For that obligation, you're going to get paid, right? You're going to get a payment. Your risk on the position is all the way to zero, but it's hard to think that gold would go down to zero. Right now, I see the December 150 puts trading at 455. What this means is if you were to sell the December 150 put, you are going to bring in $455 in premium. And you know what you're doing? You're obligating yourself to buy GLD at 150. Now, GLD is at around 160 right now, so you're obligating yourself to buy it at a discount. And that's why a lot of put traders do this particular strategy, because they want to own the stock or they want to own the asset at or below its current price, and they want to be paid to take that obligation. You know, there is a divergence going on right now between Wall Street and Main Street. And if you are concerned, then perhaps gold might be an alternative investment to include in your portfolio. Obviously, there's 3 different ways I showed you how to trade gold outside of buying the physical commodity itself. You could look at buying the actual GLD ETF or gold stocks. You could look at buying calls. You could look at selling puts. Here's the thing though, all the strategies I presented to you today depend on your belief that GLD will be moving higher in the future. Hope you enjoyed the video, guys, and I look forward to giving you more videos down the road. We'll see you then. Bye now.